What's up everybody, this is Jack from Crypto49er bringing you my knowledge in cryptocurrency. So today I want to talk about the lost decade in ICO investing. For people that are not familiar with the term the lost decade, let's go ahead to Investopedia. Basically the definition is this: is the 1990s for Japan and the first decade of the current millennium for the United States are what is considered the lost decade. As they say here, the term was also applied to describe the state of the US economy from 2000 to 2009, as an economic boom in the middle of that decade was not enough to offset the effects of two huge recessions toward the beginning and end of that period. For people that don't live in the United States, we had the dot-com boom and bust in the 2000s, followed by the 9/11 attack, which completely derailed the entire economy. And then we had this huge rise in between from all the real estate boom, which ended up causing the economic crisis in 2007, 2008. So that's pretty much the lost decade. So why am I using the lost decade to describe ICO investing? Because obviously ICO investing, we don't even have like a few years of record in terms of ICO investing. I think ICOs really got popular around 2016, 2017. There's only like 2 years at most, right? What am I describing as the lost decade? So first of all, you have to understand, I mean, most people understand it already, but like cryptocurrency moves so much faster than any traditional markets. So in my opinion, something like even a few months in time, it's like years. It's just the effect of it is just so dramatic when something like a crash of the Bitcoin price of like almost 70% from its all-time high last year to February 6th, it really affected the ICO market overall. I'm going to show you what I mean. So as you can see here, Bitcoin hit its all-time high around here actually, around December 17th. So the global market went up even further until January 7th. Then everything fell down. It's like at January 7th, it was around 800 billion in terms of the global cryptocurrency market. Then it fell all the way down to here, where we're like, I mean, not even 300 billion. And then after that, you know, we came back up right now, but it's just this whole section. I guess I can say from this point on, from all of when Bitcoin started falling, because this is actually when they have weakness. So you see when Bitcoin price and everything fell, this is the weakness part. But then there was this huge rally when everyone was FOMOing, including myself. I was FOMOing a lot of these altcoins that are super cheap. And after that, everything fell, and it fell hard. So what I'm trying to tell you guys is this: for anyone that invested in ICOs in November, and then it finally came out in December, it started trading in December. If it traded after Bitcoin fell, after it hit its peak, and all the way to today even, those ICOs have not done very well compared to the ones that were trading before that. So let's say from November to December, the ICOs that were tradable that came out and were tradable from November and December. So they came out around November and they started trading all the way up to December. Those are the ICOs that actually made a lot of money. And I'm going to show you how I came to that conclusion. So I went to ICO drops, and then there's a lot of things you can check on ICOs. A lot of people just go on the main page. You actually really shouldn't just hang out on the main page. You should really go to the ICO stats. There's so much other stuff in ICO drops that's really relevant. So anyway, go to the ICO stats page, and then I'm going to click on the advanced returns. So this way you can see when the ICO actually came out, when it ended roughly. So in here you can see that these are the ICOs that ended around February. So some of these are still not tradable yet. So I'm just going to go down to right around here, Block. I think some of these other ones are not listed on CoinMarketCap yet. Even though they might be tradable in some of the minor exchanges, a lot of them are not listed on CoinMarketCap. So it's hard to really get an idea of what they're trading at. So anyway, Block is the first one that I found on CoinMarketCap, and all of these after that are listed on CoinMarketCap. So what I did was I just picked like 10 of them. So from Block all the way to CPC chain, there are 10 cryptocurrencies, and all of them came out around the really horrible time. I mean, it's not it's not great time. Basically, it's like they came out around here. So it's like all of this stuff came around here. They came out when cryptocurrency is in bear market. From Block to CPC chain, if you just put in like $100 each in each of them, let's just say you didn't do any research in ICOs, and you're like, I'm just gonna put in $100 in each of these ICOs that come out. How much would you have gained, or how much would you have lost? On here, they tell you the USD return on investment, Ethereum return on investment, and BTC return on investment. I just did the calculation based on USD only because I pay rent and I buy stuff on a regular basis in USD dollars, and also the fact that they don't vary too extremely. Like you can see there's some variations, not extreme, not like you would see one is 1x and then there's one that's 20x. It's not like that. So they all fall within like maybe 20-30%. So you can see that off block had a 2.3x return on investment, which is not bad. But something like Iongo lost you like 84% of your money if you bought into this cryptocurrency ICO. For off block to CPC chain, if you bought in these 10 ICOs, how much profit or losses would you have made? I basically added all these from off block to CPC chain. I added all 10 of them, all the USD return on investments, and then divided by 10. And I came out with 34% gains, which is for the stock market wise. If you are previously heavily invested in stock markets, 34% gains is actually not bad. But now, let's say if we go back and turn back in time, and if you invested in Sophia TX, and I only picked Sophia TX for this specific reason. I'm going to open it right now and show you guys. Sophia TX, they ended on December 17th. So that's right at when Bitcoin was really peaking. I just added all these 10s from Sophia TX to Gifto. And then I just see how much returns you would have made if you invest in these 10. And the answer is 355% gains. This is more like how a cryptocurrency or how cryptocurrency investments should look like. Not the 34% gains that you got from investing the 10 ICOs that were trading during the bear market. But if you invested in ICOs during the bull market, you would have made a lot more gains. And that's essentially my point. You have to understand, it really comes down to how the market is performing. If the market is favorable, the ICOs that you buy into at that point in time will be trading a lot higher. Pretty much the bottom line is this: spam the ICO whitelist. So this is what I mean. Again, if you go back to ICO stats, they have another section called whitelist. So whitelist is all these ICOs that are not even traded yet, but then you have to sign up for the whitelist so that in order for you to participate. So what you want to do is sign up for every one of these ICO whitelists, basically all of them, okay, if you have the time, obviously. And some of them actually, you see, they're closed already, so it's like you really have to be quick on your heels to do this. So once you sign up for all of these ICO whitelists, then use the ICO end date plus approximately 1 month if it's an ERC20 token, or approximately 3 months if it's a new blockchain. For exchanges have to set up their wallets, because if it's an ERC20 token, it's just the Ethereum network. The exchanges don't really set up much. They just have to add a new icon on the computer, about a month, give them a month. And then you want to determine when the coin is available for trading. If it trades in a peak market, the ICO will moon. Obviously, there is good team, there's all these other factors involved, right? So you can't just say, oh, it's trading in a peak market, they're all going to moon. Although, I just showed you, all of those coins that were trading during the peak market, they did better. They were not great. Some of them were not that great, but they overall did better than the coins that were trading in bear market. It just shows you that the peak and the bear market has a huge impact on how ICO performs when it becomes tradable. So if it's trading in the bear market, look for exits. I don't have any investments, and I'm not giving you guys financial advice, but if I had investments into these coins, let's say for example the B token, which got you 1.29%, 29% gain, I'm out. Just basically forget it. I'm done. I'm out of here because I made a profit. I know that this is still a bear market situation where this coin was affected by the bear market, so there's no point to believe that this coin will rocket up. Whereas if I exit out a B token right now, take my 29% gain profit, and then say, hey, now I can look for these other coins that are coming up, in the whitelist right now, and they will be trading. Hopefully, they'll be trading at the next peak market, and then they will have a better chance of performing much better than these cryptocurrencies that just started trading right now. So that's my video for today, guys. Let me know what you guys think. Let me know if my analysis of the ICO markets and the lost decade of the ICO markets makes any sense to you, or if it's completely flawed. I want to hear about it. So leave a comment down below. Smash the like button, smash the subscribe button for me if you can. I really appreciate it. If it isn't crypto, it isn't worth mining, it isn't worth speculating. I'll see you guys tomorrow. Peace out.